This is Alan Bush with the Daily Financial Forecast for Thursday, December 1st. Starting out with the stock index futures, we did see some new historical highs yesterday in the S&P and also in the Dow. Also, we did have the Fed's beige book yesterday, which was generally upbeat, so that's somewhat supportive to yesterday's trade. Also today, we are seeing most of the economic reports coming in a bit better than expected. So that also supportive, with stock index futures generally trading a little bit better today. Nothing changing in our long-term view. Still feel that the main trend is higher, and that with the Fed likely to raise interest rates on the 14th of this month, that will not get in the way of the bull market. In fact, if we do see some additional rate increases next year, and I'm predicting at least one more, that also will not get in the way of the bull market. So nothing changing in our view. The long-term trend still appears to be higher with what we are seeing for all of the major stock index futures. Now moving over to the currencies, seeing the dollar index just a little bit lower. This seems to be more due to events happening elsewhere in the world, especially in the Eurozone, where we did have some very bullish employment numbers supporting the euro currency. Also, we have the pound trading higher on increased optimism that the UK will come to some type of an agreement, a trade agreement with the European Union. Also, we do feel once again longer term that the dollar index will be underpinned by the higher interest rate environment, and this should be a long-term situation. Now, moving over to the interest rate futures markets, sharp declines yesterday. Some additional pressure today. In fact, we do have the 30-year bonds now falling to a 17-month low. So nothing really changing in the interest rate markets. We do have prospects of the Fed likely to raise rates at the meeting on the 14th. In fact, there's a 99% chance that the Fed will raise, according to financial futures markets. We did have higher energy prices. That's also a negative for the interest rate markets, especially the bonds. Also, mostly better than expected economic reports, also a negative. So nothing changing in our view there as well. Expect further declines across the board in all of the interest rate futures markets, especially the 30-year Treasury bonds. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.